Thanks for watching the markets. Asian stocks traded mixed today. This as market players digested different data. The Japanese economy grew by 0.3% in the second quarter, which was deemed to be a positive number as it avoided going into a technical recession. While China reported data indicating that its economy was under pressure from higher US tariffs in July, with property investment decreasing further. Retail sales rose by 3.7% on an annualized basis compared to 4.8% in June, while investment in fixed assets rose by 1.6% compared to 2.8% in the prior period. The Nikkei share average lifted by 1.71%. The Hang Seng Index declined by 1%, while the Shanghai Composite Index rose by 0.83%. US markets ended more or less flat yesterday, this on the back of a sharper than expected increase in producer price inflation, serving to dampen expectations around cuts in interest rates. The Dow Jones Industrial Average declined marginally by 0.025%. The S&P 500 index marginally rose by 0.03%, while the Nasdaq Composite Index eased slightly down at 0.01%, ending the trading session at 21,710 index points. Looking at the local indicators, we see that the All-Share Index is currently up 0.1% at 102,052 index points. The Rand is at 17.57 against the US dollar, 20.54 vis-a-vis the Euro, and 23.83 against the British pound. Looking at commodities, we see that gold is trading at $3,340 an ounce, platinum at $1,343 an ounce, while Brent crude oil is trading at $66.39 a barrel. All right, and so we have with us Warwick Lucas, the head of private clients at Vunani Securities. A very good afternoon, Warwick. So what are your reflections on the week that was on global markets? Lots of moving parts.
Yes, certainly. I think a bigger than expected increase in US producer prices might just potentially dampen expectations for a cut in September by the Fed. But otherwise, I mean, markets have certainly been on a melt-up. I mean, part of that seems to be on some rate-cutting positivity, and I mean, we're seeing that signs of that in our local market. But it's also as if the US markets are adopting a no-consequence viewpoint towards tariffs, and the rest of the world is kind of slipstreaming through on this positiveness. Meantime, their bonds are behaving as if inflation's more or less under control, even though precious metals seem to differ. So, yes, a lot of moving parts, and I think the full interpretation is still a process of discovery, I'm afraid.
Yeah. So it's not only market players, but the world that's looking at this meeting between President Trump and President Putin in Alaska, essentially to look at bringing an end to the war between Russia and Ukraine. But the difficulty is that Ukraine is not party to those talks. What's the market expecting? What are your expectations from this?
So it's quite a curious one. I mean, look, war is sometimes said to be an alternative form of diplomacy. On the face of it, there appears to be different expectations going in, but yeah, that might be political theatre. I mean, Putin and his top aides have said that they plan to discuss trade and arms control issue, which would give Trump an added incentive not to let Ukraine interfere with the larger US-Russia relationship. And from the US side, I mean, they played it down the summit as a kind of a feel-out meeting. But Trump in recent days said that he would, urge Putin to accept a ceasefire, and failing which the consequences could be the likes of sanctions on major buyers of Russian oil, such as we've seen it with India, potentially on China. I think the the thing that actually gives me hope is we've seen higher aggression in the actual war itself in recent days, suggesting that Russia is seeking to actually negotiate from a stronger hand. So counterintuitively, that actually suggests to me that Russia, for the first time, might actually negotiate.
Interesting perspective. Looking at local companies, you see that Nedbank announced to the market today that it has now signed an agreement to sell its 21% stake in EcoBank. That's the bank that plays in the West Africa and Central African area for 1.8 billion rand. What's your thoughts on that price tag? How did the share price react to this news?
Okay, so I mean, the stake has previously been classified as a non-current investment held for sale, and we've had quite a process going on here, and the buyer was a local West African buyer, and we've also seen Shoprite substantially stepping back from its investment in the rest of Africa as well, having exited about 7 countries, including Nigeria, in recent times. So I think we can actually view what Nedbank is doing in part of a broader picture, that we're reversing an expansion in Africa that used to happen just because it's fashionable, and that's no longer. Well, I hope that's not an indictment of Africa free trade, but maybe it is a indictment of a world in which supply chains and trade relationships are shortening.
Yeah, no, it does seem rather weird, especially given that we keep on saying that we're the frontier, that is, the continent is the frontier for growth. So one would expect there'd be more investment in the rest of Africa rather than a withdrawal from it. But that's a conversation for another day. And lastly, what are the implications of Vodacom coming out with a statement today to say that it's now got the go-ahead to proceed with its investment in Maziv? What does that mean for the South African market, and how did the share price respond?
Okay, so I mean, we've had nearly 4 years of back and forth. At a certain point, the Competition Commission almost flipped from hostile to negotiation facilitator, signing off on revised conditions that basically let Vodacom tap into Maziv. And I think part of it is a realization that in some of these industries, competition is all very well and good, but to be ultimately competitive, you must be capable as well. And when we're talking about capital hungry industries, your market share actually matters less than who is actually capable of building the network. And I think that's particularly important in a country like South Africa, with a very large country, a lot of square kilometerage, and to actually build a network like this takes an awful lot of capex. And I think a realization came in there that, well, actually, this alternative way of doing it, knocking out the potential sticking points, was really quite constructive. And I think an important deal for both players, because it does give extra capital investment to Maziv as a whole, and the inclusion of data into a voice or originally voice business like Vodacom, a very important point, because voice is certainly not the future for any telecoms. I mean, it's legacy, it's high cash flow, but it's certainly not growth anymore. So it looks like a win-win deal.
All right, we'll wait and see how it pans out for us as South African consumers. Thank you so much, Warwick, for your time and insights as always. Have a great weekend. That was Warwick Lucas. He's the head of private clients at Vunani Securities. Let's hand it over now to Juliet.